Mentioned earlier, the economic fallout from Donald Trump's tariffs continues to send aftershocks throughout global financial markets. The impact is such that UK Prime Minister Keir Starmer is this morning going to give a speech saying that globalisation has come to an end. A Downing Street official has told the media the world has changed, globalisation is over, and we are now in a new era. Major companies, tech giants have been scrambling to deal with all the effects, and not that anyone really feels sorry for them, but the world's richest people have lost a combined $536 billion in 2 days. Elon Musk losing $31 billion, taking his total losses this year to about $130 billion. Mind-boggling numbers, aren't they? But it's not just the tech barons and the Wall Street tycoons who are hitting the wall. Most of us are going to be affected in some way, shape or form, whether it be through our investments, our super, or even at the supermarket. The unconventional economist joins us once again, Leith Van Onselen. Morning, mates.
G'day, Bill. How are you?
I'm well. Firstly, what's happened with the market since opening this morning?
Oh, look, mate, it's actually been a bloodbath. So we lost, last Thursday, the market, the ASX 200 fell by 0.9%. Then we got another 2.4% fall on Friday. And today it's taken the lead from Wall Street, which was an absolute bloodbath on Friday. Fell about $5 trillion. And that, of course, happened on Saturday our time. And then, so taking the lead from Wall Street. And today, so far, the ASX 200's down nearly 6%. So that's basically, roughly a 10% decline in the ASX 200 in the last week.
How's that? Can you extrapolate that out? How it impacts all of us? As I said, it can have some wide-ranging impacts for a lot of people in a lot of areas.
Yeah, that's right. So the impact of the tariffs is actually pretty mixed. So there's good and bad news. On the negative side, the most obvious, which I've just alluded to, is everybody's superannuation savings are going to take a hammering from these, falling share markets, that sort of thing, which obviously isn't great. It's also likely to become more expensive to holiday overseas because the Australian dollar has been hammered as well, and it's fallen to the lowest since the start of the pandemic, about 60 US cents, and it's fallen across, most currencies. For example, I'm booked for my first overseas holiday in 13 years, going to Japan in late June. And unfortunately, the Australian dollar against the Japanese yen has gone from about 100 yen at the end of last year to about 88 yen at the moment. So I'm getting hammered as well. But those are the negatives. On the positive side, there are actually positives from this though as well. So we're likely, despite the fact the Australian dollar's fallen, we're likely to see cheaper imported goods. And the reason for that is the US has slapped basically a 1/3 tariff on China, and some other countries which we import a lot of goods from. And what that means is that if China can't sell as much stuff to the US because of high tariffs, it's likely to have a surplus and it's likely to dump its products cheaper on places like Australia. So we're likely to see import inflation come down, and because of the lower imported inflation, because of the hammering on the share market, as well as the lower growth profile for the overall economy and the global economy, the Reserve Bank's also likely to cut rates a lot harder than it would have otherwise. And that's obviously good news if you're a mortgage holder, because you're likely to see interest rates fall quite significantly this year, which is obviously good if you...
And multiple times, so multiple interest rates drops, you reckon?
Yeah, absolutely. So before these tariffs are announced, the financial markets were tipping 2 to 3 rate cuts for the rest of this year. As of Friday, they'd increased that to 4 rate cuts this year, and possibly after today's market rout and everything that's happened since, we could see even deeper rate cuts. And so that's obviously great if you've got a mortgage. It's not so good if you're on fixed income and you just want to put your money in a term deposit. So there's always winners and losers in this stuff. This is a positive or a negative depending on your view. I personally view this as a negative because I've got 2 teenage kids, but lower interest rates and investors being skittish about the share market is likely to push up Australian house prices. So, so Trump's tariffs could actually engineer a mini house price boom across Australia as due to the lower cost of credit, which, whenever the RBA cuts rates, we tend to get higher house prices, as well as investors, going to the safety of bricks and mortar. So depending on your view, that's either good or bad. I personally don't like it because I've got two teenage kids and I want housing to be cheaper for them. But those are sort of the positives and the negatives from the way I see it.
Can you put a bit of historical context in terms of the market dropping? I think you said 10%. How does that compare with other shocks that the market's experienced, like you back in COVID?
So back during the GFC, the market fell about half. COVID, I think it was about 40-ish%. We're nowhere near that.
Right.
It's the start of it. I'm not saying we will get necessarily down to those levels. We just don't know.
Where does it stop? Where does it go? Does it keep going down, or will it stabilise at some stage?
Look, markets always stabilise at some point. We really don't know. Look, I'd love to pretend that I know, but I don't. Unfortunately, we are in uncharted waters here. So, the US average tariff rate is at its highest level in more than 100 years. So, and we don't know how other countries are going to respond. So China has levied tariffs back on the US, but we don't know how the rest of the world's going to respond. And does this mean that countries across, not necessarily Australia, but, we get a whole bunch of countries now erect tariff walls? We just don't know. If that happens, that's going to slow, the global economy. And, the other thing is we've never been this integrated before. So the global economy is very integrated these days. We have supply chains everywhere, and we don't really know what the spillover effects are going to be from this high tariff environment. So we don't really know exactly where this is going to end. And this is one of the reasons why markets are tanking, because if there's one thing markets hate, they hate uncertainty.
Yeah, it's volatility.
And also, volatility, uncertainty, and, less confidence. So
is Keir Starmer right there? Is he right that globalisation's over? What do you make of that?
Yeah, it's a pretty big statement, isn't it? I'm not sure if it's necessarily over full stop, but it certainly has been changed. And the world's definitely it looks like it's going into a sort of multipolar world of trade blocks and that sort of things, which isn't great. We've become accustomed to a certain way of things operating. There's obviously good and bad to that. So the entire Western world has basically exported their manufacturing capacity to Asia, mostly to China, which I think was, potentially some of it's all right, but I think we've gone too far with that.
Yeah.
But we just don't know where this is going to end. I guess that's the worry about it. And there's just a lot of uncertainty at the moment, and that unfortunately has been impacted in the share market.
If JP Morgan is saying there's a 60% chance that the US could enter a recession, would you agree with that that's a fair assessment and possible?
Yeah, possibly. I mean, Shane Oliver from AMP last week was tipping, 40%, I think, or 30 or 40%. We just don't know. But certainly the chances of a recession has gone up a lot.
Yeah.
And, whether it's 60%, 50%, we don't really know. Like, people just, put these sort of figures on there. But definitely the world is different to how it was last Thursday when President Trump announced these tariffs.
Given what's happened to these global markets, are we any clearer as to why Donald Trump has done this? Does his rationale hold up, make any sense?
No, it doesn't. Well, I mean, he did signal before the election that he was going to implement tariffs, but the way he's done it is pretty nonsensical, I must say. So effectively what he's done is he's calculated the tariff charged on the US, based on the US trade deficit and how much the US imports from that country. So effectively, the bigger the US trade deficit, the bigger the tariff. So it's sort of like he's gone through it and he wants to square up the US trade deficit. And so you levy a bigger tariff on a country where you have a bigger trade deficit. But it is a bit perverse also in that there's countries like Australia where the US exports more than double what it imports from Australia, and it still hit us with a 10% tariff. And that's because under its methodology, we should have actually had a negative tariff of about 30-odd%. But they don't want to do that, so they've just set a minimum of 10. So countries like us, where the US is a trade surplus, get a 10% tariff, and then it's a scale depending on how big their trade deficit is and how much the US imports from these places. So it's very nonsensical. We've also seen just some random, little tiny island.
Oh yeah, but the penguins,
not really even nations. Yeah, just like basically barely have any people and don't actually trade with the US being levied with tariffs. But I think the Trump administration has probably done that to stop third parties. So stop Australia, for example, send in goods through that jurisdiction to avoid the tariff.
Yeah, it looks like people in America are starting to wake up a little bit more, and they're starting to, I guess, push back and they're protesting over there. They'll start to feel it more. When will they start to feel it more on the ground, and the impacts on them?
Oh, absolutely. So the impacts are not just. So obviously, the rich Americans are getting impacted because their businesses have been impacted, their share portfolios, their assets. But the ordinary American's going to get impacted because most of the goods they buy are imported. So every time they go to Walmart to buy a new laptop, a new TV, any sort of consumer good, well, those goods are going to go up in cost, whether it's a gaming console or whatever. So the rubber's going to hit the road pretty quickly for them when they suddenly see that the cost of their goods, which are mostly imported, starts to increase.
Yeah.
It's going to hit it.
What's your recommendation off the drop on the markets here? Should people do a check if they're managing their own super? Should they do a check of their super to see whether they may be exposed? What do you see happening and recommend there?
Yeah, look, it's a hard one. I mean, I don't like giving out financial advice. Everyone's situation is different. For me personally, I'm going to sit on the sidelines, and if the markets fall far enough, I'll end up buying in. But yeah, look, unfortunately, we've all got superannuation, and we're all exposed to this no matter what. And you can't, you generally speaking, you can't just pull your money out of your super.
Yeah.
Maybe if you're worried about it falling further, you could switch into fixed interest and that sort of thing, which is more stable. But I'll leave that to everyone else to decide what they want to do with their own money.
And it's not just Trump coming after our super, but there's hackers as well, of course. It's been a disastrous few days for Australia with super now.
Yeah, it is. It's been a nasty few days, and nobody likes to look at the markets and see their retirement balances fall, especially if you're at retirement age. It's not a great time, but unfortunately, it is what it is, and we've just got to grin and bear it.
Yeah. All right, mate. Always nice to chat and get your perspective on things. We'll chat again soon.
Yeah, no worries, Bill. Speak to you next time.
Okay, Leith Van Onselen, the unconventional economist. Are you feeling worried about your super? Maybe if you're right across self-managed super and you're looking after it, you can share your thoughts with us and give us a bit of a heads up. 133888.